where we take the specific analysis and source material you've shared with us and really extract the critical insights, the pure knowledge you need to be ahead of the curve. On Rocket Lab, RKLB, because it just had one of the most significant single-day rallies we've tracked in the space sector in a long time.
It was a big one.
Huge one. You sent us an analysis report detailing how RKLB just absolutely exploded. We're talking a surge of nearly 9% in a single trading session. It smashed through major technical resistance points to close right at $75.99.
And that specific number, $75.99, is so important here.
Okay, let's unpack this. Our mission today, based entirely on this highly specific analysis, is to move past the market noise. We need to figure out if this aggressive move is simply overhyped momentum.
The classic space stock hype we've seen so many times before.
Exactly. Or if we're truly witnessing a fundamental structural repricing of Rocket Lab. And most importantly, we have to understand the core thesis of the report. Why analysts think $76 isn't a peak, but the actual launch pad for a sustained run that could take RKLB all the way to $100.
And that framing is what makes this deep dive so necessary for you. This analysis isn't treating RKLB as just another volatile stock. I mean, it's making a profound statement.
What's that?
It's explicitly positioning them as the second most important space company on Earth, second only to the largest private player.
Wow.
That is an enormous claim. It requires immediate operational and financial validation. So our discussion has to connect this sharp, immediate market breakout, that 9% jump, to the long-term strategic execution that's finally convincing institutional investors to, get on board.
Let's start with that market action then, because a 9% move in one day for a company that's getting close to a $40 billion valuation it's staggering.
It was a very decisive day. We saw the closing price settle at $75.99, which represents a daily gain of $6.23.
Okay, and the percentage gain was 8.93%. But the report says that's only half the story.
Right, because the way the stock traded is much more telling.
You mentioned the way it traded. The report uses this term clean breakout. For our listeners who aren't, watching the charts minute by minute, what does a clean breakout like that really tell us about the conviction of the buyers?
What's fascinating here is the nature of the buying pressure. You see, a lot of rallies are hesitant. They sort of stair-step, meaning the stock hits resistance, pulls back a bit, retests, and then grinds higher.
Right, a slow climb.
A clean breakout, as this analysis defines it, means the stock opened strong at $70.63, just rocketed toward that high of $76.24, and there was just straight, sustained buying, no noticeable hesitation. It wasn't cautious accumulation. It was a determined spike in demand.
So this wasn't just a tentative entry by, say, retail traders.
Precisely. And that's where the volume comes in. The report specifically called out that it detected heavy institutional buying. That is the key indicator for you. When you see volume that heavy with such a strong, clean breakout, it just screams conviction from sophisticated capital. Big funds were driving this. They were either starting new positions or, aggressively adding to the ones they had.
They weren't waiting for a dip.
No, they were chasing the conviction. They believe the fundamental story is being massively repriced right now.
Okay, so that validates the market action. But big funds, they need more than just momentum. They need proof of execution. For years, the skeptical view on the entire space sector was that it's just too expensive.
Right, that space was unprofitable, a capital sinkhole.
Exactly. So where is the underlying proof that RKLB is structurally different?
And this is where we shift from the market dynamics to, fundamental excellence. According to this analysis, RKLB is executing flawlessly and just systematically dismantling that old critique. The financials are the foundation for this rally.
And it starts with the earnings report.
It does. Their latest earnings, specifically Q3, delivered a record revenue figure of $155 million.
That's a strong growth number on its own.
It is, but it's the quality of that growth that really matters. That $155 million is a 48% year-over-year growth rate. This is acceleration, not just slow improvement. But if we're talking about what really opens the floodgates for that patient, long-term institutional money, we have to look deeper than just the top line.
And that brings us to the gross margin figure that the analysis highlighted.
Absolutely. The critical metric cited is the gross margin hitting 37%. You just cannot gloss over that number.
Especially in a capital-heavy industry like this.
Exactly. This is the difference between a company just selling its services cheaply to grab market share, which makes investors nervous, and a company that has achieved real operational efficiency.
So a 37% margin suggests they're not just growing revenue, they're actually building a profitable business structure into every single thing they sell.
Correct. It means they're making real money on every mission and satellite component they build. They've optimized their processes to a degree that generates strong margins, even while they're scaling up so fast. This just removes the biggest question mark over these companies, the path to profitability.
I see.
This financial discipline is the non-negotiable prerequisite that turns a speculative growth stock into a must-own infrastructure play for the big funds.
That is a phenomenal distinction to make. The flawless financial execution gives them stability. It attracts that conservative capital. But discipline alone rarely causes a vertical 9% daily surge.
No, you need an accelerator for that.
Here's where it gets really interesting. The analysts are adamant that the true accelerant, the factor that pushed the stock from the 60s to $76 and beyond, is pure anticipation built around what they're calling the neutron supercycle.
The neutron vehicle is the strategic pivot that Wall Street is pricing in today. I mean, up until now, RKLB has earned its reputation with the Electron vehicle,
Which is a very successful small lift platform.
highly successful, but it serves a relatively niche market. Custom small satellite deployments. Neutron changes the entire addressable market.
How so?
It represents the company's entry into the medium lift launch vehicle category. This is not a small upgrade. This is RKLB deciding to compete for entirely new multi-billion-dollar contracts.
So it's like,
Think of it this way. Electron is like them building custom bicycles for specialty deliveries. Neutron is them deciding to start building cross-country 18-wheelers. It's a massive strategic shift.
and the competitive angle there is obvious. By moving into medium lift, they're positioning themselves to directly challenge the near monopoly that SpaceX currently has in constellation deployment.
Exactly. Wall Street is no longer looking at RKLB as just the small launch specialist. They're now pricing it as a massive infrastructure play. The analysis is clear. They're seen as building the essential infrastructure for the next generation of space communication and defense.
But hold on a second. The Neutron vehicle hasn't even had its first launch yet, has it? The report says the stock is running purely in anticipation of Neutron hitting its milestones in early 2026. Isn't a nearly $40 billion market cap, based so heavily on a future asset, the very definition of a speculative bet?
That's a crucial question. And the answer, according to the analysis, lies in scarcity and validated capability. The argument is that the proven 37% gross margin has de-risked the management team's ability to execute.
I see.
So institutions are willing to bet on Neutron's success because the current business is already so profitable and well-run. That confidence creates what the analysis calls institutional FOMO, fear of missing out.
The fear of being left behind.
Right. The space infrastructure sector is seen as a multi-decade growth trend. When a company successfully moves from small-cap success to being a credible challenger in a major segment, it becomes a must-own stock for large growth funds.
And they have mandates. They have to own the leaders in these big trends.
Exactly. If they wait until Neutron is already flying successfully, the price will be significantly higher. They'll have missed the big move.
And that explains the volume spike we started with. The analysts confirmed these spikes mean big institutions are loading the boat now because they see that path to profitability narrowing fast.
That's it. $76 is them catching up before the next leg up begins. It's a stamp of approval, betting on the successful execution of Neutron, which is now combined with the proven efficiency of the existing business. It's a powerful combination.
Let's pivot now to the technical outlook the analysis provided, give you some concrete guideposts you can use to assess the health of this massive move.
Okay, the analysis lays out a very clear roadmap. The most crucial support level right now, the level the institutions are expected to defend, is $70.
And that's not just a round number.
Not at all. It was the psychological resistance that RKLB struggled with for months before this breakout. So as long as RKLB holds above that $70 line, the trend is reported to be aggressively bullish.
And if it were to fail?
If $70 were to fail, the analysis suggests the market would see that as a loss of institutional conviction. You could see a sharp pullback. But as long as it holds, the momentum is confirmed.
And since it just smashed through all that prior resistance, where does that put the stock, technically speaking?
It puts RKLB firmly into what technicians call blue sky territory. This is a great concept for you to understand. It means the stock has broken above all recent historical highs.
So there's no overhead resistance.
Right. There's no prior supply of stock, no group of disappointed sellers who bought at, say, $80 or $90 and are just waiting to sell to break even. When you enter blue sky territory, the path higher is clearer because the only resistance you face is psychological.
And speaking of psychological resistance, the technical targets are clearly laid out.
Yes. Following the 76-cycle validation point, the next major psychological ceiling is $80. If that breaks, the analysis sees very little friction before the stock challenges $85. That's the immediate short-term trajectory they're watching.
But the real attention grabber, the projection that's driving all this institutional FOMO, is that high-end forecast. This is the big picture for you to consider.
That's the $100 price target. The prediction is explicit. If neutron test updates remain positive throughout this current quarter, meaning if the company hits its engineering milestones on schedule, the analysis forecasts a $100 price target before the end of 2026.
Wow.
That is the finish line the large growth funds are racing to price in today.
So what does this all mean? The analysis report's final verdict seems to synthesize everything we've talked about. They've framed this whole thing as the Tesla of space story unfolding, a massive, vertically integrated disruptor.
Whose CEO's vision is now backed by proven financial discipline.
Exactly. They conclude that the $76 price tag is validation, not a top. It's confirmation that the market is finally giving them credit for both the financial discipline and the strategic ambition that Neutron represents.
If we connect this to the bigger picture, you really have two core fundamental takeaways driving RKLB's valuation right now. First, the proven financial discipline, especially that industry-leading 37% gross margin. That fundamentally de-risks the existing business model.
Okay, that's number one.
And second, the strategic ambition embodied by Neutron, which takes them from a high-growth niche player to challenging a massive monopoly. That combination of present stability and future scale is what makes them so irresistible to the big funds that drove this breakout.
And for those of you already holding, the analysis suggests the volatility we're seeing is actually your friend. It shakes out the weaker hands. For those looking to enter this story, the clear advice provided is that any dip back near that confirmed $70 support level is cited as a golden buying opportunity.
An opportunity that institutions themselves might use to add to their positions.
Right.
This narrative is entirely focused on infrastructure and scale. The $76 mark is explicitly called validation. And this raises an important question for you to explore as you continue to track this space.
Right.
Why is it that financial analysis treats anticipation, the future success of Neutron, as equally powerful as already achieved milestones when valuing a massive infrastructure play? What specific traits, like RKLB's 37% margin, does it take for a company to transition from a successful small cap into a must-own growth fund holding? And maybe more importantly, what are the warning signs the market might provide if that powerful anticipation fails to meet reality? That is the narrative you need to keep tracking.